This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And it has been a wild week. We've saw big reversals across the board, corn, soybeans, and wheat from the Monday morning lows. And we saw prices bump up, corn rallying as much as about 40 cents from those Monday lows, pressing up against technical resistance for that July contract. 381 3/4 is the big barrier that we're looking at as we head into the end of the week. Friday session, 100-day moving average comes in right there, but this is also the original breakdown point from the March 29th USDA report. Wouldn't be surprised to see the market back off a little bit from here. But going into next week, if this wet weather continues, I wouldn't be surprised to see another technical breakout and short covering from the funds. The next line in the sand that we're looking at comes in closer towards 390. That represents a key Fibonacci retracement level as well as the 200-day moving average. Now, moving over to the soybean market, we're a little bit less optimistic because there is that lingering concern over trade with China. And if there's no one to buy our soybeans, I think that'll put a little bit more pressure, at least a little bit more headwind in the soybean market. 850, obviously the psychologically significant barrier that a lot of folks are looking at. If we do get a closeout above here, really not a whole lot of technical resistance until we get up towards 885. So that's what we're looking at there for the soybean market. Wrapping things up with the wheat trade. Wheat also firming up very nicely, which is very encouraging to see considering we saw a pretty big reversal off of yesterday's highs to finish the session negative. We didn't get that weakness spill over into the overnight and early morning trade, which indicated that we got some positive trade going. Good exports here this morning. 463 to 465 is going to be a big pocket to get out above this key. It represents a key retracement, the April 16th breakdown point. So if we're able to get out above here, I wouldn't be surprised to see additional short covering take us a little bit closer towards 485, which is the top end of the range from March, as well as a couple key moving averages, including the 100-day. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.